What's up, everybody? It's Friday, December 4th. And we had another big week, big day up in the market, new highs. And I think a lot of people are looking at this and, thinking that it's crazy. For example, today we had the job report and what was payroll is 248,000 or something like that. That was half of what they were expecting. I think they were looking for like a 450,000 number. So a weak print, but the market went up. Now this all gets back to what I've been talking about for so long. I mean, these fiscal flows are so powerful. The market's being pulled up by a bunch of large cap stocks that are benefiting from these. These are huge government transfers to the economy. They're not going out equally, but they're massive, they're unprecedented, they're historic, and there's companies that are benefiting from these transfers, and there's people that are benefiting from these transfers, and it's lifting the market. And until we see a slowdown in these flows, and I talked about this yesterday, we have sentiment now which is very, very bullish. And this is a contrast to what we saw since March, April, May, June, July, and all that time I was telling you, you got to stay bullish. You got to stay bullish because, number one, at that time that was like the low-hanging fruit. The sentiment was really negative. Now the sentiment is really positive, but we're still going up because the flows are just too strong. And it's going to stay like that until the flows start to decelerate, or there's a policy shift or something. I mean, that's really what we got to pay attention to here. The dollar was lower again today. This gets back to what I've been saying for years now, for anyone who's been watching these videos. Like, the underlying fundamentals of the dollar are bearish. One thing I did notice is that now the media and market observers, they're starting to make mention of the weak dollar. So I think sentiment on the dollar is getting a little bit negative. You could have a bounce. But that's just going to be another selling opportunity, because until the underlying fundamentals for the dollar change, and I've spelled those out for you in the past, that's the trade deficit and that's the fiscal deficit. Until we at least start to see some narrowing in that, the trend is down. But it is a gradual trend down, although in the last, couple of weeks here, maybe the last 4 or 5 weeks, it has accelerated down. But, we'll get a bounce. As I said, monetary policy is supportive of the dollar. Asset purchases and low interest rates, that's supportive of the dollar. So, I mean, you have these two forces, but the overriding force is the fiscal and the trade deficits. Those two deficits, they are negative for the dollar. And we may at some point down the road see those things turn around. That is a function of policy, of course, and that's what you have to pay attention to. So everything remains in effect. These trends remain in effect. We still have very high bullish sentiment for the stock market, but that can persist. That can persist for a long time, especially when we have these flows. Yesterday, I don't know if you caught this, I don't know if I mentioned this, but OPEC decided that they were going to raise production by 500,000 barrels a day starting in January. That's a modest increase, and we saw oil prices move up. I have to point out, however, that in the last 3 weeks we have started to see inventories build again. So even though that's a small increase slated for January, I think it's something to be aware of, and we have to see how that plays out. The other thing is we saw another increase in the rig count. Operating oil rigs at the highest level since May, so at the highest level in 7 months. We have seen an increase in U.S. domestic production. And we have seen an increase in producer short selling of oil. They are selling into this rally. So something to keep an eye on. And for those of you who are Forex traders, Oil correlates very well to the Canadian dollar. The Canadian dollar has had a strong move up, so keep an eye on that. Anyway, let me mention one more thing. The banking data, I just started to go over that, comes out on Friday afternoon. Another drop in loans and leases, but we did see an increase in consumer loans and particularly in credit card loans. Those have been contracting at the fastest rate in 10 years. We saw a little bit of a pickup. I mean, it was the biggest increase, the biggest weekly increase in 2 months. Not quite sure the reason. It could have been the holidays. It could be that people are starting to feel the pinch from fading stimulus and fading unemployment support, unemployment benefits, and maybe they're relying on more credit to make purchases, but we'll see how that trend plays out in the next couple of weeks. Anyway, it's all, the breakdown is all going to be in my report, as it always is. Go to my website, pitbulleconomics.com, sign up for a 30-day free trial. I'm pretty sure I'm going to be ending the 30-day free trials in January, and the rate is going up to $500 a month, and it's still a bargain at that price. All right, everybody, have a great weekend. See you on Monday. Bye-bye.